To Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live 888-994-4995. Studio A.
Hi, welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Today we have Max Fisch with Nationwide Mortgage. He's one of our sponsors, and today we're going to talk about how we can help you make some money when it comes down to buying a home. So you're thinking about buying a home, you want to get a little bit of government help? We have something called Hometown Heroes. They're running out of money, so you better hurry up and find out what you need to know. So welcome, Max. Let's talk about mortgages today.
Thank you so much for having me. It's always a pleasure.
Yes. So first we want to congratulate Max. He just had a baby. Well, not personally. I mean, otherwise his
Yes, I did.
came right back to shape.
Yes, I did. It's
So
it's a game changer.
Yes.
You know.
There's a why now to why you
I
did
know,
this.
I know. And I can't just, it's not just about us anymore,
Yeah.
which is the biggest change. So it's been great, and we're happy. He's 2.5 weeks old now.
Yeah.
So
You have a whole nother
Pretty
17
soon,
years, 11 months, and 1.5 weeks to go.
yes. Well, you would think, and then they
And then they come back.
then they stay or come back or whatever,
Yeah.
But
Lifetime
yeah, it's great.
membership.
Yeah, exactly. It's awesome though. So yeah, it's been a whirlwind the past couple weeks, but I'm happy to be here and talk about some cool things that are going on.
Yeah, so Hometown Heroes was something that was originally rolled out specifically for school teachers, firefighters.
Yeah.
What other kind of professionals was it for?
Yeah, so there's a list of like a ton of them. Massage therapists.
That was part of Hometown Heroes?
Yeah, like therapy, different forms and different versions of therapy. I mean, obviously you had to be licensed and things like that, but there was a list of, 50 to 60 professions that that qualified. But a lot in the medical space, law enforcement, things of that nature were really like the why behind the program to begin with.
But that changed.
Yeah.
That
Well, it evolved, and there was definitely more added to it.
Okay.
But starting next week, which we're now taking applications for, but starting next week, it's a whole different ballgame with this program.
But I think what the main focus here is that if you are seriously thinking about buying, you need to not think that this program is going to be around for a long time.
Sure.
How is this program funded?
Yeah, so there was $100 million allocated last summer to the program. Just up until 4 or 5 months ago, there was about $50 million left. Well, last week it came out that they ran out of the first batch of funding. Oh, wow. Which was from last year. And that's with the program only being for the list of 50, 60 professions that we just named, right?
And it already had run out.
And it's already run out.
Okay.
There's an additional $100 million being added that's starting next week. But now it's open to anybody that works for a Florida-based company.
Okay.
And so to think that, it ran out in, let's say, 11 months' time from the first opening,
Right.
With it being limited to certain professions, now that it's being open to, 60 to 70% more people, I mean, this $100 million could run out very quickly. A lot of models are saying potentially by the end of the year.
So let's talk about what the pros are, and then we'll go on to the cons about this program, because I would imagine that everything has,
both sides to it.
Both sides to it. So let's talk about the pros. What's the pros to this?
Well, the pro is that you get the lesser of, with the new guidelines, you get the lesser of $35,000 or 5%.
Okay, so let's break that down.
Yeah.
The lesser of $35,000 or 5%.
So I'll give you an example.
So,
Let's use a $400,000 house.
okay.
5% of $400,000 is $20,000.
So you get $20,000.
So you would get $20,000, not the full 35. It's the lesser of the two.
Can you use that as your 5% down?
Yeah. You can use it. It goes towards the pot of down payment and closing costs.
Okay, so it's for both. Okay.
Yeah. It's just your cash to close.
Right. So if you could do a 3% loan, a 3% first-time home buyer loan, conventional, right?
Mm-hmm.
Or an FHA, 3.5%, you could use that other 2 or 1.5% left over towards closing costs?
Correct.
So if you could potentially get an owner to donate, it's not donating, but to provide closing costs.
Yeah, like a seller concession.
Yeah, seller concession of like another 2 or 3%.
You could buy a house with no money.
And could you get cash back?
No, you can't.
And the only reason I say that is because like, oh, so it could just be more money towards the down payment.
Correct. It wouldn't. You can't get cash in your pocket from it, but
Right.
you can keep cash in your pocket from it, if that makes sense.
Right. Instead of taking your own money out of your pocket.
Correct.
Yeah.
So that's kind of how the down payment works. So in easy terms, in order to get the $35,000, you'd have to be purchasing a $700,000 house, because then that would be 5%.
But is there like income restrictions here though?
Yeah. But the income restrictions rose too.
Okay. So tell us about that.
So the last go around, the income restriction, let's just say in the Tri-County area,
Mm-hmm.
was 134 and some change, I believe.
So if you had no debt, what would a 134 income, basically based on today's interest rates, which we could talk about, what would that kind of look like with no debt? Like you
Probably like a $550,000 to $600,000 loan.
So again, you still wouldn't be able to get to that 7.
With how it was before. Now the income has risen to in the mid 150s, so almost $20,000. And so now you're talking about somebody that could potentially get a 650 loan.
Okay.
660 loan with the new income being raised.
Okay.
And so that's really going to help, potentially, obviously somebody with no debt maybe get to that 700,000. And it's not just limited to people that don't have down payment though. That's the key. You can put 10% down and then use Hometown Heroes.
Oh no, I get. Yeah, I mean that makes sense. It's just you're trying to, because if you're trying to bring your debt to income ratio down and get, So
but now let's just figure you don't want to pay the 5%. You probably would need to max out that qualifying income in order to get to the 700,000.
Okay.
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 So that's one of the pros. The other, the main pro of the whole entire Hometown Hero is really the grant that's given, right? It just makes home ownership and qualification easier when you can not have to worry about, hey, do I have enough assets and the 5% down plus closing costs to be able to close.
So if somebody, and I know guidelines change all the time, but how sometimes in some loans, right, they require you have 6 months reserves. Do they require that in this loan?
Well, the reserve, not necessarily. So with primary residences, typically reserves aren't needed unless you have investment properties.
Okay.
To where, like, if you have a bunch of investment properties, they might require you have a certain amount of reserves per investment property.
So in case vacancy.
Yeah, but really it comes down to what is DU requiring when we run DU? Sometimes DU.
And DU is desktop underwriting.
Desktop
for people
underwriter.
Don't know what that
Correct,
is. Yeah.
correct.
We got to
So,
remember, not
I know,
everybody knows
I
what
know,
we're talking
I know,
about.
I'm
They're
so
like,
sorry.
what is a DU?
I'm so sorry. Whatever the automated underwriting system tells us the reserve amount is really what we have to go based off of. But typically, you wouldn't need reserves for a program like this simply because it's meant for first-time home buyers, and that means that they don't have investment properties.
But do you think it's a good idea for somebody to purchase a home when they don't really have any reserves or backup?
Do I think it's a good idea? I guess it just depends on the specific person's financial situation, right? Like, I've had clients that, make significant amount of income. They're not very good savers, but they make significant amount of income. So with a little tweaking here and there, they can build up a nest egg pretty quickly. For those types of buyers, maybe it's not as important, but
by getting rid of like SB, I didn't want to say what it was because if I say that word, then they're going to come after me. But getting rid of something like drinking coffee every day.
Exactly, that adds up, right? But obviously, there's some things that people should be aware of when they're getting into a home. Like, hey, you're spending this amount of money. Make sure you leave yourself an emergency fund. I don't really get too much into
their personal,
the financial advising side of things, just because, if somebody asks me, of course, but I don't, I don't really want to impose myself on people's budget.
We're going to come back after commercial. We're going to talk about the cons of of this program. But we're going to watch your amazing commercial first and see our sponsors, which is Max Fisch with Nationwide Mortgage and Josh Wiseman with Title Brothers. Stay tuned, and we will be right back from commercial.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fisch, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fisch is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fisch today at 954-729-6933 or max.fisch@nwmcorp.net.
At Title Brothers LLC, our mission is to give you the best closing experience anywhere in the country. Founded in 2020 by Adam Lohman and Josh Wiseman, here at Title Brothers, we're your one-stop shop for residential real estate, title insurance, title and escrow services, real estate closing, and due diligence services. While primarily located in South Florida, we also host dozens of closings throughout the state and even electronically as requested. To contact the Title Brothers, call us at 954-995-4988 or visit our website and get a quick quote today.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at lauraess.com. And now back to the show.
Hi, welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. If you're thinking about buying or selling a home, I definitely am your girl. I can help you. I can help you get your home ready for sale. I'm doing second mortgages for you at 0% interest to get your home ready, to make sure that it shows in tip-top shape. That is going to net you more money in the sale of your home, and it's not going to cost you anything extra. So definitely give me a call at 954-650-0827. Welcome back, Max, with Nationwide Mortgage. Max, before we get started back onto the cons of this program, if somebody is looking for a mortgage, what is the best way for them to get a hold of you?
Sure. The best way is always by my personal cell. That's the only number I really give out. It's at 954-729-6933. That's 954-729-6933. And you can call or text me any time of the day.
Or at night, because he's got a baby. Just kidding. I'm kidding. But you'll probably be up.
I probably will be, yes.
It depends on how much your mortgage is for. Anyway, so we were talking about a program that's been out for about a little over a year, or about a year.
About a year,
It's called Hometown Heroes. It came out. All the lenders are talking about it. Everybody's pushing this. So this was originally developed for certain types of professionals, and now they're opening it up across the board to everybody. But they ran out of money already. $100 million, you said?
It was initially allocated.
And they're going to have another $100 million. And since now it's going from where it was like this many, you know, like a certain finite amount, and now it's going to open up to everybody, no matter what your profession is. So guys, if you're thinking about buying a house, this is the time to get in on this, because you're going to be able to get your down payment. You're going to get part of your closing cost. And you know what? If a house has been on the market for a little bit, you know, you might be able to get your closing costs paid too. I mean, the market's moving. I think what the difference is right now, we're seeing a lot of cash buyers out there, so it is reducing the amount of mortgages that have been going on, correct?
Correct. Yeah. I think a lot of people have been coming out with cash.
It's busy, but you know, so people are selling in other states, having cash from that. And
Correct.
That's creating a little
trying
bit
to
down
avoid,
in your part of the business.
Yeah, absolutely. I mean, I think.
But you're still doing amazing.
Yeah, I think we've been able to stay pretty steady, but yeah, I mean, the cash has been a problem. I mean, I shouldn't say a problem, but it's definitely been prevalent.
It's a problem for you.
In South Florida.
It's not a problem for
yeah, it's not a problem for you, but it's been prevalent in South Florida ever since COVID.
Yeah,
you know, just
because
people
they're selling their homes at places where it's more expensive.
Sure.
Their homes are worth more, and coming here, which is now making our homes very expensive, and making this really just a little less affordable than it was when I first got here.
Yeah,
So-
exactly. So,
Or before you were born.
well, you got to think about this for a second. You know, somebody with cash, maybe if they're retiring or they've sold a home and they're coming here, a lot of they might not care what they're spending for a house as long as they're comfortable.
Right.
So it inflates, you know.
Listen, the sun here is great.
Yeah,
Like,
I know. So as long as they're comfortable, I mean, listen, when I'm 75, if I've got some cash, as long as I'm comfortable, I'm not going to nitpick over price. You know,
I hear
I'm
ya.
not going to do that.
You'll have some cash.
Just a different perspective.
You
I
and the
guess.
rest of the millennials then, and you'll
Yeah, I
be old,
know.
80 years old. We're the millennials.
I know, with tattoos.
Yeah.
You know.
So let's go to the cons
Sure.
of utilizing this program. What would you say the cons are?
So
Let's be honest. You know,
yeah, I
we want
think
to make sure we're helping to educate our audience to make sure they're making good decisions. But this could be the right decision, even
Yeah.
if the con might not really be that big of a con to them.
Well, that's the biggest key. The biggest key is obviously, you know, first things first, we're not salesmen, right? We need to just make sure that people
We're
are making.
advisors.
Yeah, we need to make sure that people are making well-informed decisions. And I think that that's a lost art in our industry
It
sometimes.
is, and
because
people think we're like used car salesmen, or
exactly.
and we're not respected as much as we should be when we are trying to do what we feel is in the best interest of the consumer.
Exactly. And so I think it's very important that any of my clients that choose to go with Hometown Heroes, they understand what we're talking about here today. They understand the pros and cons.
And did you know, as realtors, they are not clients?
Really?
They're customers.
Oh, I love it.
They're
I like
not
that better.
clients, which it's funny because like you feel like they're a client,
Sure.
right? But we're
I like that
actually not
better.
supposed to call them clients. We're supposed to call them customers. It's an actual
Wonder
thing.
if it's the same on my end.
I wonder too.
I got to look into it.
Yeah.
But one of the biggest cons that sticks out to me is that people think that this money is a grant, and it's not a grant. It's a 0% interest-free loan. It's a lien on the property.
Okay.
So for people that don't know that out there, that means that that needs to be paid back if done, and if anything is done with that property.
Refinance.
If you
sell it.
refinance, if you sell,
What
it
about
needs-
getting an equity line?
it needs to be paid
considered
back.
To be,
Well,
you
it's
have to put it into the equity line?
It depends on if the equity line, what lien position they're okay with taking.
So they would have to take third position.
Yeah,
And
some-
nobody's going to take third
Some,
position.
you know, some maybe fourth if there's attack, you know, something happens. I mean,
Would that be a fourth if you got like solar panels? Like how
again,
does that work?
it just depends on the company. If it's through Y Green, which is a,
Can you do solar panels through Y-Green? I
I'm
thought
not-
that was more like roofs and air conditioners.
it
and
is. It is.
impact
I'm not sure if
windows.
solar has gone into Y Green yet, but let's just use Y Green for an
And
example.
who went out of business, Y-Green or Pace? One of them went out of
It's a
business.
good question. It's a good question because I always see it Pace/Y Green, so I don't know if one
Okay.
bought the other. But if it's something that's going through your taxes, that's going to take first lien position. Then the mortgage company is going to take second. Then the Hometown Hero is going to take third.
Wait a minute. You're telling me Y-Green would take first position in your taxes over,
Over mortgage, taxes always come first.
and there's not something in the mortgage that would say that you couldn't do that?
Nope. Taxes always are.
Well, taxes do, yeah, I
Yeah,
get it.
yeah.
But that's a tricky thing
Yeah.
to be putting that into your taxes.
Yeah. My point is that this is a lien on your property. This is not a grant, and it is something that you will have to pay back. So if you ever want to refinance, if rates go down and you want to refinance, you have to keep in the back of your mind, you better have equity in your house to pay this back. And if you don't, then you're going to be asked to pay it back in full, or else you're not going to be able to refinance.
So basically, the government is lending you money.
0% interest.
What's the purpose of the government doing this? What are they trying to stimulate? Do you have any? I mean, have you read any articles on this?
I can only speculate that they're just trying to encourage home ownership. You know, they're
Okay.
trying to make home ownership more affordable for people that might have been priced out.
Yeah,
You know, I mean, I can only speculate that that's probably the reason
Right.
that this program came out. But just like everything else, you don't really feel the cons, like what we're talking about here, until the consumers of the product start to feel the cons.
Right.
You know, everything up front is just
Which
speculative.
isn't going to be right now, because who's refinancing their house?
No, but
right
it's not going
now?
to be right now. But
Yeah.
people have to be informed that in a year from now, 2 years from now, all of these people that are using Hometown Heroes have to understand that this is not a grant. That it is on their
Do they
it is on
sign
their property.
something and it tells them specifically? I mean, they sign something that says
Yeah, I
they
mean
pay
it's
it
a
back.
part of the closing docs, but I mean,
Most
how many
people don't
times
read.
how many times have you had a customer, not a client? How many times have you had a customer
A couple of times.
that comes and asks you a question, you're like, this was all spelled out for you in your closing documents? People don't, I mean, for
I've
the
had
most
some
part.
that have requested in advance to read it. And,
Yeah, I mean,
you know,
of course.
And I know that you're telling them this. And,
Of course,
You know, I know
yeah.
that buying a home is very overwhelming. Moving, packing is overwhelming.
That's
So
why.
they only hear some stuff that you tell them.
That's why things can get lost, and we have to make sure that people understand exactly what they're getting into. And so that is one of the major cons, is that, you know, number one, it's a con that it's not broadcasted enough for people to understand this.
Right.
Right? That's a con within itself. Number two is that it actually is, you know, not a grant. That it's actually a lien, 0% interest-free loan. So that's a big con. The other con is that you have to be able to qualify with slightly higher of a credit score than you would normally need to. So you
Okay.
can only go down typically to 640, whereas normally, like on a conventional loan, sometimes you can go down all the way to 620. Right, and so you know, the qualification isn't apples to apples.
Well, what about the qualification, but as far as like interest rate, is that a little less on this?
The
or
interest rate, it just depends on the property. The interest rate, it's funny the way that
Why
these.
does it depend on the property, not the person?
Well, it depends on if it's a condo, the interest rate might be higher.
Okay.
You know, or the interest rate on Hometown Heroes might be lower than what they would normally get on a conventional. It varies, but it's not necessarily about the what's higher and lower, you know, apples to apples. It's more about people understanding that interest rates for these programs are standard across the board,
Right.
no matter what lender you go with. But there's a key to this interest rate discussion with this program that a lot of lenders might not know. So it's very important that whoever you're working with understands this program in and out, because I've heard a lot of horror stories that Hometown Heroes typically only lets you lock the rate for 30 days.
Okay.
So if you're under contract for 45 days and a lender doesn't know that, they're going to lock it for 30, and then on day 31, that loan might be dead.
And how can you get it back?
They won't extend. They won't.
You can't start a new.
So people have to know.
So who you hire matters. And
Yeah.
I think I did give a little bit misinformation that I just realized in my head. I said this is open to everyone. No, that is wrong. It's not everyone. It's everyone that actually physically works in,
a Florida location.
well, no, that's wrong. That's wrong too. You can physically work here, but if your company's out of Denver, you don't qualify. Right?
That is what is currently, and I'm not going to speak on, you know, that is currently something that is not super clear. Like, meaning it's not super clear that what if I work for TD Bank and I work in a location
No,
in
that would
Del
be different,
Rey,
I think, because that's
but their-
TD Bank's here.
but their corporation is somewhere else, you know, it's based out of wherever.
Yeah,
So-
but that seems like that would be very gray. But
correct.
I'm saying like you work for a company that's legitimately like you work from home in your home.
Oh, but the
and
company's not here. Then you wouldn't qualify.
not like Home Depot where you work from.
Yeah.
They do have employees that work from
Yeah.
home, but they're not based out of Florida, right?
Correct.
And
Then that
so-
wouldn't qualify. If you work from home and the company's not based out of
right.
Florida.
Even though there's
yeah.
a Home Depot here,
Unless that is the one that you go to work. See, this is where it
gets very. So how
it
do you
gets
how
very-
do you get the answer? You have to submit something.
Yeah, I mean, we would have to submit it directly to, you know, not the underwriter is the first step, and then the underwriter needs to get it cleared through
Right.
the state, you know, to be able to approve
All right.
that.
Well, here's what we're going to say basically. Bottom line is that you have questions about Hometown Hero. You want to know if you qualify for Hometown Hero. You're going to give Max Fisch a call at
954-729-6933.
And if you need a realtor to help you find that home for the Hometown Heroes, give Laura Sanders a call at 954-650-0827. Check my website out at laurassell.com. And I look forward to seeing you guys next week. Have a great night.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next week.